Morning. Uh, uh, in this video, I'm covering the again with the same unit, that is Unit 2 on definitions for the fifth semester students of the subject Indirect Tax 1. Here in definitions, today I'm covering about the uh, exempted supplies, input and input services. The learning objective is the definition, that is understanding the definition of the exempted supplies, input and input services. To know the concept of exempt supplies, input and input services, it will help the students to understand the definition and to understand the concept of these terms. Introduction. Here the I told GST is it's a significant step of the government in indirect tax reforms, that is introducing GST on 1st July 2017 to make a major reforms in the taxation, indirect taxation system in India. And one of the major advantage is that here the government introduced a dual GST, mm, that is levying of GST both by the central and state government at a time, that is under the concurrent list state. And GST, it is the levying the tax on the supply of goods and services. The section 2 of the GST Act contains the definitions of the various terms that's used in the GST. Earlier sessions we have discussed the many terms like actionable claim, address of delivery, aggregate turnover, business, associated enterprises, agriculturist, agent, etc. So today first we'll move to the term of supply. Here the supply, GST is levied on the supply of goods or services or both. If there is no supply, means you cannot levy the GST. So supply is the main concept for levying goods and service tax under the GST Act. As per section 2 subsection 92, supply means it includes the sale and any transfer, barter, exchange, license, any rental, lease or disposals made for a consideration by a person in the course or for the furtherance of business. Any of these activity we call it as a supply. If there is any sale of goods is also termed as supply. If there is any transfer, any barter, that is exchange of goods between goods, any licenses, any rental we pay, any lease transactions, any disposals made for the consideration by a person, so that is in his business or in his for the extension of business activities or for the furtherance of the business activities, then it is termed as a supply under the GST Act. And the supply is the main concept for the levying the goods and service tax. So it's very important to understand the term of the supply or the definition given under the GST Act. Next is the exempted supplies. The word exempt itself states the it is not taxable, it is a tax free one. Exempt supply means the supply of any goods or services or both which attracts your nil rate of tax. Which attracts your nil rate of tax means there is no any taxable rate is there not there, or which may be wholly exempted from tax under section 11, means here the total that transaction itself is exempted from the tax, means no tax is paid by the dealer or by supplier or by any business person on such transactions, or as per the section 6 of the IGST Act. And the exempt supplies also includes the non-taxable supplies. Non-taxable means the transactions which are not taxed by the GST authorities. Such supplies is also treated as the exempt supplies. And here the exempt supplies, I told it comprise the three types of supplies. One is nil rate, that is supplies taxable at a nil rate of tax. Supplies that are wholly or partially exempted from CGST or IGST by way of a notification. And third is the non-taxable supplies, as it is defined under section 2 subsection 78, supplies that are not taxable under the act. Here it should be noted that the zero rated supplies such as exports would not be treated as supplies taxable at nil rate of tax. Uh, and the supplies that are partially exempted from tax under this act will not be considered as exempt supplies. On the contrary, partially exempted supplies would be considered as exempted supplies under the UTGST Act. Next is of the term input. So it is defined under section 2 subsection 52. So input means any goods other than the capital goods used or intended to be used by a supplier in the course or in the furtherance of business is treated as an input. Input means any goods other than the capital goods what is used by the business person, by the supplier in his business for the furtherance of business or for the extension of his business activities is treated as an input. And here it is defined under the GST law. The input is defined under the GST law, but here the input it excludes the capital goods. Then we should know what is capital goods. Here as per section 2 subsection 19, capital goods means the value of which is capitalized in the books of accounts of the person claiming the credit and which are used or intended to be used in the course or in the furtherance of his business. Means any supplier or any business person, uh, any capital goods what he buys, his that value of such goods is to be capitalized in the books of his accounts. So he can claim the credit and that capital goods are used. The object of having a capital goods is to be used in the course of his business or in the extension or for the furtherance of his business activity. That is treated as the capital goods. Next is input services. So it's also one of the term used in the GST. Input service, the its definition is stated in section 2 subsection 53. Any services used or intended to be used by a supplier in his course or in the furtherance of business is treated as a service. Means anything, any service that you are going to use for your business purpose or for the activity of your business or for in the course of your business, that is considered as a input services. Next is input tax. So here input tax means generally we can see the GST that is levied on the input, that is um, having a inward supply by the supplier. So on that input any tax is levied by the government, it is treated as input tax. The input tax, it includes the CGST, IGST, SGST, that is Central Goods and Service Tax, Integrated Goods and Service Tax, and State Goods and Service Tax that is charged on any supply of goods or services or both made to him on a forward charge basis. Forward charge basis means one who supplies the goods, he becomes responsible to pay tax to the government. And secondly, the CGST, IGST, SGST charged on the reverse charge basis. Reverse charge basis means here the recipient of the goods is liable to pay GST to the government. That is called as a reverse charge basis. And thirdly, here the IGST, which is levied on import of goods. When you import the goods, the import of goods is also comes under the input tax. uh, uh, Input tax is levied when there is a import of goods. And input tax here, it does not include the tax paid under the composition scheme. If any tax is paid under the composition scheme, then it doesn't come under the purview of the input tax. Next, we can know about the examples of the exempt supplies. I told the exempt supplies, it is defined under section 2, subsection 47. The example here is uh, any service given by government or by a local authority, any services by the Reserve Bank of India, services by foreign diplomatic missions located, uh, any export of goods, any supply to SEZ zone. So here these transactions or this type of supply or supply of service is treated as an exempted service or exempted supply, and it is not taxable when you compute the um, taxable turnover. So this is about the definitions of the term exempt supplies and input services, input tax. So references I have quoted here. So go through the